Good afternoon. Thank you for watching Huttons Property Watch. Today, I'm going to share with you the latest numbers that came out from URA on the private residential market. In the first quarter itself, prices rose 3.3%, which is higher than the 2.1% registered in the fourth quarter of 2020. So, what is actually driving this price growth in the first quarter of 2021? We believe it actually boils down to the resale segment, because in the first quarter itself, in total there was about 8,100 units transacted. Actually, this is also the highest since the fourth quarter of 2012. And out of these 8,100 units, more than 55% actually came from the resale market. And the resale market also comprises of the landed segment also. And URA number shows that the landed segment actually saw a price gains of more than 6%. And then in the first quarter itself, you have so the Eden, which is at the Great Court area, sold for 4,800 plus per square foot, and then another GCB in the Nasim area actually sold for a record $4,005 per square foot based on land itself. So all these, we believe, have contributed more to the price gains in the first quarter of 2021. And inside on the new sale market itself, about 3,457 units were actually sold in first quarter. This is and sales in the CCR is actually at an 8-year high, and it's driven by a lot actually from projects such as Midtown Modern, the M, as well as RV Altitude. So with all these very strong numbers itself, it has actually so-called driven down the number of uncompleted unsold units in the market to a low of 21,600 odd units in the first quarter. And right now, this is actually 44% lower than what the peak that we had in the first quarter of 2019. In fact, since 2019, the uncompleted units that remain unsold has been going downwards all the while until this particular quarter in 2021 itself. And when this happened, developer actually has to actually go back to the market to actually buy land to build more projects so as to offer to the market so that the demand can be satisfied. And if we are to look at what is actually available in the market based on the en bloc sites as well as the government land sales, be on the confirmed list and reserve list, if we add all this together, whatever has been sold from the en bloc sites, and then what is actually being offered under the collective sales segment, but the tender has not been closed, and then we add everything from the government land sales, be on the confirmed or reserve list, this probably add up to around 7,000 units in terms of supply that can be added to the market itself. But when we compare this versus what was the annual average demand, which was about 9,400 units over the last 5 years, we can see that it is actually not sufficient to actually match the demand itself. Therefore, there is really a need to increase the supply of land in the market, be it from the collective sales side or from the government side itself. And because of the excellent sales numbers that we see in the first quarter of 2021, which was close to 3,500 units, we are revising our forecast for the entire year to between 9,000 and 10,000 units, and a price growth of up to 5% in 2021. Although you may think that the price growth is high, but I have to mention here is that the price growth here is actually because there was some cost pressure in the construction industry due to COVID-19. And then right now, because of what's happening in India, so there is a ban on foreign workers coming into Singapore to work in the construction industry. That would have further repercussions on costs in the construction industry in 2021 as well as 2022. Therefore, this price increase a lot are actually because of the cost pressure that the construction industry is facing, and they might flow through over to the development cost side, and not because of developer increasing the price itself. That's all I have today for the Huttons Property Watch on the private residential market. Thank you for watching.